Thank you very much for joining us in this session, which is, I think, a unique opportunity to be able to hear from a distinguished local investor about why and how we can see investing capital in companies that are shaping a greener tomorrow really matters for us. In my role as the head of sustainable and impact investing at Barclays in the private bank, I spend a lot of time talking to individuals, families, family offices, and often as well our corporate clients about where and how they want to invest. And increasingly what I'm seeing is they want to invest both for financial returns, but also to solve some of the social and environmental problems that we're facing around the world. To help me bring this topic to life, very pleased to have Sonia here. Although, let me give you a little bit more of an introduction than you have before. Although studying with the aspiration to become a journalist, Sonia's career was formed in strategy and commercial roles in Microsoft, Viacom, and Turner. She eventually became, as she says, an accidental venture capitalist. Having moved to Dubai in 2011, and while still working at her day job, with 3 friends, she started angel investing and then created a platform of informal pitch nights. This grew exponentially and eventually formalized into the largest syndicate in the GCC. In 2013, these 4 diverse founding partners launched Venture Souk, well, Venture Hub, then Venture Souk, with 2 areas of focus, one on fintech and the other on climate tech. Now in its 5th fund, Venture Souk manages more than $250 million from seed to Series A or B, capital into these 2 themes. And as well in 2020, they launched the Climate Conscious Fellowship with Start ID and New York, NYU, Abu Dhabi to educate the next generation of investors on how to invest in this way. Well, the first 2 cohorts were 57. I'm not sure what the latest cohort. Total 57. So our discussion today really explores why there is an opportunity for climate tech ventures in the GCC, what are the sectors of interest, and a little bit of a peek into the behind-the-scenes decision-making that an investor will go through. So hopefully, whether or not you're a founder, a fellow investor, or just someone interested as a solution provider, we want to give you a few insights and trends for 2025 and beyond. Absolutely. So how many people are on the investor side? So actually deploying capital into companies? A few people there. How many are companies looking for capital? There we go. 1 or 2. All right, now you know who to find. Sorry about that, everybody. And then on a corporate solution provider or corporates. Anybody? A few corporates. Excellent. All right, so we have a pretty good mix in the audience as we go through. Let me start with the first topic and the first question around sort of why we're seeing in the GCC particularly, what's motivating investors to become more interested in climate tech from your experience over the last few years?
So we've been investing in climate tech for the last 5 years. We've made 20 investments globally across sectors including food and ag, supply chain, climate fintech, energy management, et cetera. So we've been kind of drinking the Kool-Aid for a while. I think the catalyst really for this becoming part of the narrative here in the UAE was it hosting COP28, to be honest, last year. So a lot of the work that we'd been doing before COP28 kind of came to fruition at COP28, which we were very involved in. People who were not investing in climate started wanting to become familiar because they were attending COP events, et cetera. And then in parallel, we were also kind of working on educating the market, as you mentioned, the fellowship program, which we launched in 2020, so that was 4 years ago, with NYU Abu Dhabi, to kind of, again, nurture the next generation of LPs. For me, it really starts with the LPs. I think it's obviously great to launch climate tech accelerators, et cetera, but if you really want to kind of change the mindset in the region, you need to build out the capital stack, right? And it's not just about giving money to the big boys like Brookfield and TPG, it's about also investing in the early stage investors as well, who will actually fund the innovative companies that you want to bring to the UAE through programs launched by Shura in Sharjah or Hub 71 in Abu Dhabi or DIFC here, right? So I think it starts with that. I think climate is definitely kind of on the radar. I think there was a misconception before that if you're investing in things like climate, it's kind of automatically bucketed as CSR or deemed worthy of philanthropy. We've definitely seen a shift away from that. I think corporates specifically, and I think some of you are in the room, have noticed that you're moving away from let's focus on climate this year as part of our CSR program and plant a bunch of trees, and instead are saying, hey, instead of doing that, let's invest in a company that's doing this at an industrial scale. Like a company like Dendra, for example, that's set up here from the UK, that's doing all the mangrove restoration work, for example, right?
So, and I guess what you're seeing, or underlying that, the motivations can be commercial. They can be desire to see positive outcomes. From a family perspective, we often see legacy as one of the reasons. And obviously that will differ if you're a corporate investor versus a traditional institutional investor. Do you see that mindset shifting in terms of the underlying drivers here relative to investors in other places?
It's definitely shifting. There's a generational change for sure. And I think like even in our fellowship, we can see it. So our fellowship focuses on, how do you again nurture that next generation of investor coming in the region? But the fellows that we select are from a mix of backgrounds. So we have corporate, so the head of sustainability, for example, if anyone's interested, come find me. We have, family offices, sovereign wealth funds represented. So really it's a nice mix of like-minded individuals. It's pan-GCC, so it's not just UAE, it's Saudi, it's Bahrain, Oman, it's Kuwait. And it's basically getting them kind of on the same page and understanding that they can take their learnings back to their respective organizations and say, hey guys, whether it be values-based investing, whether it be purely commercial, et cetera, we're VC, right? So we have LPs that we have to make money for. So we're not a philanthropy. We're investing in these climate founders to make a financial return. We have one example of a company, for example, that was a 14x for us in the climate space, right? People need to see these data points also to understand that there's a huge commercial opportunity. Obviously, again, I'm drinking the Kool-Aid, but for me, this is the largest economic opportunity for the decades to come. Even if you're purely commercially driven, you want to invest in this space because it ain't going away.
And I guess just to build on that, you're saying the fellows come to the program to learn about how to go about doing this in terms of the underlying piece, but they have to take it back to their organizations.
Yeah.
How far along, because the individuals who are joining probably have also drunk the Kool-Aid, or at least willing to,
Yeah.
how much do you see them having a challenge to go back into their organizations and convince those that this is also something that's commercially viable?
So we select 25 fellows a year, so we've graduated 57 total so far. Our next cohort's going to be after Ramadan. And yes, they do. So a lot of them actually are totally drinking the Kool-Aid because now they're on panels at events like this, actually talking about what their organizations are doing. From the first cohort, a third of them actually ended up investing in our impact fund. Okay. So they actually decided to walk the talk and actually said, okay, well, actually, I want to test this out with my own money and actually invest. And then some of them are actually looking at our existing climate fund as well. So whether it be on a personal level or whether it be actually trying to create change, what's interesting is we do these surveys at the beginning and at the end. At the beginning, we ask them, like, do you integrate impact measurement or things like ESG frameworks, et cetera? Majority actually don't. There's also a gap there, right? I think, and that's going to change. I think obviously the West is more sophisticated when it comes to this space, but I think it's getting there slowly but surely here, where, if you look at a market like Saudi, publicly listed companies have to report on their ESG metrics, for example, right? We're not seeing that we're not quite there here, but eventually we will get there, right? And once that is mandated from the top, we live in a top-down driven region, right? So if things like climate or ESG or impact monitoring are important to the leadership, it will inevitably trickle down to all of us in the private sector, and then ultimately to the founders themselves, right? So everyone across the value chain actually needs to be prepared for this.
Yeah, it's interesting. We often separate it when we're talking to the investors about the difference between ESG, so the internal operating practices of a company, relative to its goods and services, and wanting to make sure that both of those are met, certainly from a climate tech founder perspective.
And I think here there's still conflation, by the way, between ESG and impact.
Yeah, not just here. I think globally it's interesting to still see that challenge and sort of where that plays out in terms of the stage of company and as investors what you're thinking about. I'm curious, in 2020 you said that there was a traditional two-pocket model where we make money on one hand and we give it away on another, and you just referred to that a little bit in the CSR sense. I'm wondering, 4 years on, 5 years on, roughly, do you see that having shifted, or what's going to need to shift more in terms of people's mindset to recognize that it's not just two separate pieces, but the link between the two of them?
I think it's changing because of the generational kind of evolution that we talked about. I think, again, back to the numbers, I think people need to see tangible case studies, like examples of companies that have gone beyond the valley of death. So meaning they've raised past Series A. So that company I mentioned that's doing the mangrove restoration, we seeded them in 2018. Oxford grad, like super smart scientist. It's a she, which is amazing. And convinced them to actually expand to this region, which they ended up doing. They just closed a Series B, Ramco Ventures, Zook, like a lot of well-known investors actually came. We need to see more of those, actually, so that more traditional quote-unquote investors understand that, again, this is not a philanthropic game. These are for-profit companies. They're building very sustainable, long-term companies that have a long-term vision. They will eventually exit, obviously, because that's what we're looking for as investors, but they are there, right? And I think, like, we talked about this a bit earlier, if you look at the numbers from the PwC numbers from last year, $5 billion was invested in the climate space across stages, not just early stage, from the GCC. Majority of that, number one, was from Saudi, number two was from UAE. Majority of that went to the West. So majority of that went to the US, and majority of that went to Europe. Yes, it makes sense. Deals are more abundant there, innovation, etc. That's not to say that there's not talent here. I was just talking to Sam, who's in the audience, and I was saying, like, we've reviewed 450 climate companies from the MENA region. Not just the GCC, but MENA overall, right? Across food and ag and climate risk management and energy management, etc. They're there. Now, quantity does not mean quality necessarily, but there is talent. And so our whole focus, for example, for our fund, which we'll talk about, is to actually focus on how do you nurture that next generation of climate founder coming out of this region. Why is it that out of that $5 billion that was spent in climate, only 58 million was invested in the MENA region? Yeah. That's teeny weeny. Yeah.
And actually, that is a good segue into that second topic around the sectors and themes. Obviously, the overall event has 8 different themes. In your climate innovation fund, you pick 6. Food and ag, ecosystem and biodiversity restoration, climate risk management, buildings and energy management, sustainable supply chains, and climate fintech. Why these? What made them uniquely interesting for you as a fund to be investing in?
Well, 8 sectors that we've already invested into, so it's sectors that we feel comfortable investing into. Also keeping in mind that we are a VC, so obviously 10-year term horizon for our funds. We can't do anything that's too energy intensive, meaning asset heavy. So, or capital intensive is what I meant, sorry. So basically we don't have we can't wait 15 years for commercialization to happen. We kind of need to see it happen before the 10-year mark. So these are sectors that oftentimes have a mix of hardware and software, which is what we'd be looking for. So we don't only do pure software, but there has to be a software component for the founders in the room, if you're building something that is hardware kind of driven, there has to be that software component as well.
And I guess...
And there's a lot of intertwining between these sectors as well.
Oh,
right?
absolutely.
You can look at an ag tech deal that has a climate fintech angle as well. Right? Yeah.
Absolutely. So this will make the next question more difficult in that sense because of the overlap, but also in a classic, which is your favorite child?
Yeah.
Let's think about today. Let's pick 2 of the themes that you think today, as you're wandering around here at the event or more generally that you're seeing are really growing. And then back to your point of the deployment period for your fund. Let's look 5 years out, sort of end of the decade, so the back end of the deployment period. What would be 2 that you'd see being interesting at that stage?
I think historically this region has focused a lot around food security, so food and ag has been well covered. I think a lot of the other, so we're a thematic fund, so we run, as you said, kind of, fintech, climate, that's the vision for VentureSouk is to continue to do thematic specialized funds. If you look at our peers, our friends who run other funds in the region, they tend to be more generalist. If they will dip their toes in climate, they probably will be attracted to more kind of food and ag type deals because maybe it's just kind of easier to understand. This probably the one I'm most attracted to commercially or professionally would be the least sexy one, which is supply chain. But I also think that we're kind of ideally positioned in this region to be leaders in the supply chain space. On a personal level, if you were to give me a magic wand and say, Sonia, what do you want your legacy to be? I would love to launch a fund one day that focuses on the intersection between technology and wildlife conservation. So that's something that I personally deeply care about. So how do we apply some of the amazing technologies being built actually protecting our flora and our fauna across the world? So those are kind of the 2 areas that I'm personally and professionally digging deeper into.
Yeah, it's very interesting. Actually, from an investor perspective, that's something that we often counsel clients on as well, that it's not the sexy or the visible or the high visibility type sectors that are most attractive from a financial perspective. Things that are less sexy, supply chain, grid technologies, fundamental, building material type of technologies that aren't going to get major journalistic coverage actually are a lot more attractive because ironically they're less visible to investors and therefore from a valuation perspective and an opportunity set, but also more fundamental to the work that needs to go on.
Also we saw this, I think a lot of you saw this as well, right? There was a valuation bubble. We were somewhat sheltered from it. I think the US was hit, things like fintech, for example, a lot more than maybe we were here. But we look at our existing climate portfolio, Touchwood, none of them went belly up, right? And that's also because none of them were at crazy valuations when we went in. We're very mindful of the valuations that we go in. We've said no to a lot of deals because we think that the valuations aren't just justifiable. So I think even for the founders in the room, just make sure that you sanity check your valuation expectations and triangulate. And if you have kind of investor friends, maybe ask them to sanity check, etc. So far, we've been fortunate that most of the deals that we've seen, they haven't been crazy valuation-wise, and that's also why we haven't felt that kind of the down rounds, if you will, that maybe some of the other sectors have felt.
No, I mean, undoubtedly globally, down rounds and bridging loans have come in massively across the sector. And so we can certainly see investors being more cautious, but entrepreneurs also trying to extend out the runway that they've been given thus far. Which is a nice segue to our last question. As an investor and thinking about your decision making, I want you to share just beyond the usual platitudes of what you're looking for as an investor, and certainly at an early stage, which has its own challenges as well in terms of identifying opportunities. Maybe start it off, beyond just the impact assessment that you're going to do relative to a fintech company, because obviously that'll be part of it. What is different, right, between the fintech theme and the climate tech theme, beyond just the impact measurement and an expectation? What do you see or are noticing in terms of how you're looking at the deals that is different from, I'll use fintech as a traditional sector, in the climate tech space?
I mean, we do have two scorecards for climate versus fintech has one scorecard which is purely commercially driven. We have the same scorecard that's commercial, but we also have an impact scorecard. So there's definitely like a difference there. Funnily enough, and I'm being very transparent here, like our team is actually kind of training, quote unquote, or kind of nurturing or educating the fintech team with regards to ESG integration in the due diligence process. So we integrate ESG and impact questions in our due diligence process. So the companies have to meet both thresholds or the triple threshold in order to make it to the next steps. Fintech wasn't really doing that, but now they're starting to do that. We have an ESG committee in place that's a mix of fintech and climate to make sure that we're consistent across the board. Of course, separate from that, it's the founders. Like ultimately, we invest seed to Series A, so it's super early. Like you can have the best idea and then poor execution and it belly flops, right? So it's really about the founding team. And for us specifically, it's what is the motivation, right, for that founder, especially in the climate space. Why are they doing what they're doing? Ultimately, most of the founders that we interact with are doing it for much deeper. I'm not saying fintech is not deep, but like for much more kind of existential reasons, I would say, than maybe someone building a fintech product. Like they actually think about their legacy, they think about the meaningful, positive outcomes they want to kind of leave behind, etc. And so that is kind of a higher purpose that's there. In addition to obviously making money and returns, etc. We want both, right? But I think for us, it's being able to cut through the BS, basically, pardon my French. Because I mean, I get pitched by a lot of founders who are like, oh, Sonia, like she's the impact-y, like climate-y person. Like I need to add a bunch of like basically greenwashed slides in my deck to for it to appeal to her. I can cut through that BS. So like don't try that with me. Like I will grill you. And for me, we spend a lot of time getting to know the founder at a deeper level. Like that's really important. Like why are you doing what you're doing? Because if you look back at some of the companies that did not do so well in our portfolio, in general, not just climate, it's not because the founder was not good. It's not because he or she didn't have the right pedigree. It's not because they didn't have the right experience. It's not because the idea was bad. It just wasn't the right time for that founder to be building what they're building. And so also understanding the timing question of like, is this the right time for you, founder X, to be building what you're building? And what are the motivations behind why you're building what you're doing?
Yeah, and also oftentimes, how are you going to sustain yourself? Because it always takes longer than what
Exactly.
everybody expects.
And also, like for the founders in the room, like don't come up to me and say, hey, I'm fundraising and we're closing our round in a month. Ain't gonna happen either. Like we're, as fund managers, people forget we have to fundraise as well, right? Like I'm not gonna say, oh yes, I'm gonna close my climate fund next month. It's not gonna happen. It's probably gonna take like 6 months to, in this environment, I'd be lucky if it takes a year even.
Final question. Imagine it's 2030, we're at the end of the decade. Let's try to do one sentence. What unique value or role do you see investors playing in the climate transition? What is the role that the investor side can uniquely play to help move this forward for us?
I mean, we as early stage investors will be catalysts for innovation. The entrepreneurs, we were talking about this before, like, since COP, there's 4 climate tech accelerators that have launched in the UAE alone. That's great. But these entrepreneurs, and I'm sure some of you are in the room, need funding. So how can we make sure that we're the only climate-focused fund in the region? How can we make sure that by 2030, we have at least like 10 to 20 of us doing the same thing, right? And kind of making sure that these founders actually have access to capital, because otherwise they're not going to go anywhere.
Excellent. Well, yeah. Hopefully some of you out there will be on either side of that piece. Thank you, Sonia, for the time and the insights and joining us on the panel today. To close out, let me also just share a couple of personal thoughts, I guess, from my perspective in Barclays and where I'm sitting. I mean, increasingly, we are seeing investors that are recognizing that their capital makes an impact on the world, and being able to consider that either from a risk perspective and an ESG standpoint, or in trying to find the companies that are providing these solutions that are commercially growing is part of that. And that's the interesting opportunity I think that we've faced, which is the recognizing certainly that early stage companies are going to be part of that portfolio. And I can see it both for the aspect of the financial, but also the personal. And in that sense, we often see, and I personally believe, there's an opportunity here, not just we're investing for tomorrow, but to influence it in the way that we would like to see the world. So with that, thank you very much for the time. Thank you, Sonia.
Thank you.
Appreciate it.